Okay, good morning, good afternoon, depending on which side of the globe you're at. Welcome to the FMI broadcast session number 15, in which we're going to talk about how to safeguard digital payments from the UK experience. So as usual, I'm your host and the moderator. I'm Carlos Leon. First, I'm going to do some introduction and housekeeping, and then we're going to have a very lively and interesting conversation with our two co-speakers. Then in the last 15 minutes, we're going to have questions and answers. I think that we can wait for one more minute for everyone to join, and then we're going to start with the intro from each one of our guests. So let's go grab a glass of water, let's sit comfortably, and in a couple of seconds, we're going to start. Okay, I think everyone that was entering is already here. So I think that we can start now. So once again, welcome to the FMI broadcast session 15, Safeguarding Digital Finance. Today we have two prime speakers, Ivan Mortimer-Schutts and David Rennie, who are our co-speakers. So thank you both for joining us today in this broadcast. Right now, I'm going to ask you to present or to introduce yourselves, and you can take the advantage of the opportunity to give any disclaimer that you think it's valid right now. There are no central bankers today, so normally the disclaimers will be very easy to make. So let's go.
Shall I go first then? My name's David Rennie. I work for a company called IDEMIA. IDEMIA is a global biometrics and cryptography company operating around the world. We produce and personalize smart cards, SIMs, and we also do biometric technologies. But today I am representing the Digital Pound Foundation and specifically the Identity and Privacy Working Group for the Digital Pound Foundation.
Okay, and thank you for inviting me on this discussion. My name is Ivan Mortimer-Schutts. I was with the IFC and World Bank Group for a dozen years, mostly in Asia, and now also an independent advisor to other organizations, including SIMBAS, which is a micro banking technology provider. And this is a topic, of course, around safeguarding digital payments that I've been involved in over the last 10 years, working with central banks, payment service providers, and increasingly also actors in the field of data portability, and looking forward to an interesting discussion about the ideas that are being discussed now in the UK around the digital pound. So thank you very much.
Thank you, Ivan. In fact, you already introduced what we're going to talk about, but let me rephrase it a little bit. And the general topic that we would like to address today has to do with how to make retail payments safer. And this is something that is not a new topic, obviously, because we have retail payments since long ago. But the thing is that, and this is a topic that we are FNA are really getting into right now, the arrival of fast payments, or the making the payments more efficient and faster, it has a lot of it poses a lot of challenges for not only for financial institutions but also for financial authorities all around the globe, because fast payments also means faster fraud, faster scams, and more difficulties for financial authorities, financial institutions to try to counter those financial crimes that we just mentioned. And I also like to mention always that it's not only a matter of the speed in the payments, but it's also a matter of interoperability. Because when you mix these two things, the speed and the interoperability, it helps a lot the fraudsters to take the money out of the accounts of the victims and start moving it around very quickly, even to take it out, to cash out, or to move it to another jurisdiction. So any effort that we have, that financial authorities and financial institutions and payment system providers can make to make the system safer against fraud, scams, and money laundering, obviously it's very important. And as Ivan already mentioned, but we're going to talk about this from the perspective of the Digital Pound project, in which the privacy working group at the Digital Pound Foundation is going to be, I mean, its proposal that came rather recently is what we're going to talk about today. So I hope I did a good work with the introduction. So let's start. First question, as we always do, is can you tell us a little bit more about what you do and what is the purpose of the Identity and Privacy Working Group at the Digital Pound Foundation?
Sure. So the Digital Pound Foundation is a trade association made up of organizations that have an interest in the digital pound and in stable coins, and are proponents of the digital pound. So we are broadly speaking in favor of the creation of a digital pound in the UK. And one of the hot topics always when discussing central bank digital currency is the subject of identity and privacy. So the idea of creating a working group is that we need to have what you might describe as a sensible conversation about the topics of identity and privacy. Very often the subject can become quite emotive. People have concerns about Big Brother government, etc., or worries about where their personal data is being processed and used. So we wanted to get together and set out the current situation, what's happening, what the problems are, and what needs to be fixed in the creation of a digital pound. So that's the purpose, broadly speaking, of the working group. We've got a growing number of people who are interested in this, so it's a growing working group, and obviously keen to encourage others to join us.
Maybe I can just reciprocate a little bit. I mean, I think I'm not part of the Digital Pound Foundation, but I think what's interesting in this context is that it's a good example of an industry organization where that is actually needed in many markets, as we see an increasing array of developments, not just in faster payments, but also in the introduction of CBDC and the development of stablecoins and alternative both asset and payment mechanisms. And I think that it illustrates how, as we move through this process in multiple countries and in a cross-border context, a lot of the ways that we have conducted either regulatory or market operations, whether it be precisely around identity, filtering controls for AML or CFT, or also for monitoring the stability and the economic flows of payment sector, we actually have an interesting opportunity to rethink whether the tools and the way we do these things today are fit for purpose. Maybe replicating them the way they are today in these new environments will be actually ineffective, and it gives us maybe an opportunity to improve that balance, which we always need to try and find between regulatory objectives around control and monitoring and stability on the one hand, but on the other hand, having more efficient, more consumer-friendly or business-friendly and innovative products. And that's a moving target that needs more dialogue, both within industry and between industry and policymakers. So it's a welcome discussion.
That's great, and I think that one of the points that you just mentioned, Ivan, has to do with rethinking. And I think that I mean, I'm not going to start the discussion of what pushed CBDCs up front of in the industry or in the discussions. If it was cryptos, it was Libra, if whatever it was. The thing is that whatever happened, CBDCs is like a push to rethink what money is, what payment instruments are, and what are, as you just mentioned, how to rethink how the tools to counter AML, to counter money laundering, to counter fraud, to counter scams can be redesign, repurposed, and how to define them in a better way. Because as in one of the documents that I read from the privacy working group at the Digital Bank Foundation, is that we are failing at fixing this problem, if it can be fixed in some way somehow. So I think that's the whole purpose of this group, and that's the whole purpose of the proposal that we're going to discuss now, which is what we have like as our second question, which is the published article in the Digital Bank Foundation website, which is called CBDC, an opportunity to rethink AML regulations. So first of all, let's try to have a good summary about what this proposal is about. Can you help us, David?
Of course. So in the working group, we started off by looking at the different stakeholders into a digital pound. Who are the organizations, and what type of data do they need for a digital pound to function safely and securely? As we were working through that, we moved to the logic. We did our research. We found that in the current money laundering regime, we have 4 different supervisory regimes trying to supervise, I think it's upwards of 30,000 organizations in the UK that have to comply with the money laundering regulations. And a report by LexisNexis published last year said that the cost of compliance for those organizations was over 1% of UK GDP. So those organizations were spending upwards of £30 billion a year to comply with money laundering regulations, just to comply with them. Now, how successful they are in complying with money laundering regulations is perhaps a question that's unanswerable, but the National Crime Agency in the UK has estimated that potentially hundreds of billions of pounds are being are laundered in the UK. Now, I'm not privy to the figures. I'm sure none of us are, but we have to look at structurally, is the way in which we are trying to address money laundering today appropriate, and is there potential for a better way of approaching it? So what we through discussion, we looked at what would we do as a mental model. What would happen if we removed from the financial institutions the payment interface providers, as they're described in the Bank of England documents? If we remove the responsibility for due diligence, customer due diligence, and transaction monitoring away from those organisations, and created a separate organisation, which we called a compliance service, and placed the responsibilities there. So from a user perspective, if you wanted to open an account to process payments in digital pounds, you would first be directed to a compliance service. You would go through your identity verification process and your onboarding process, if you like, your KYC process there, and then you would agree to share appropriate data with your payment interface provider, the PIP as it's known. Now, that would have to be a two-directional data sharing arrangement. But if we did that, then yes, the PIP notionally doesn't have to have the identity information for the customer. We can discuss whether that would be appropriate or not. That's a detail. But most importantly, that cost, if we're saying it's 30 billion across 30,000 plus organizations, would move into a set of compliance services, and we were assuming there would be multiple compliance services because there are different financial products out there and they would work differently and they'd have different specialisms. But from a supervisory perspective, it would be easier to supervise 10, 20, 30, I don't know how many compliance services than it would be across 30,000 plus financial institutions and the like. So that was a model that we looked at, and we've tested it from a number of angles. And what we're looking to do is in the next 12 months or so is put a little bit of meat on the bones, working out what would this look like in reality, how would it actually work, And the starting point, as with all things of this nature, is to start with some testing with real people to see, do they understand this concept and does it make sense to them? Would they be comfortable with it? So that's the start of the work we're going to be doing in 2024.
I have some questions right now, and sorry that I forgot at the beginning to state that the questions from the audience are going to start like 15 minutes before we end the broadcast. But I have my question now. Is this like some sort of outsourcing, know your client from banks?
I think it's more fundamental than that. So there have been attempts at KYC utilities in the past, and as you say, outsourcing arrangements. What we would propose here is to remove responsibility away from the PIP and into a specialist organization called a compliance service. So it's not so much outsourcing the responsibility, because in that case, ultimately it would still retain responsibility. This is about fundamentally shifting it away to a separate organization that is very clear in its purpose to be enabling compliance, and leaving the payment interface provider to do what it should be doing, which is providing innovative new financial services.
Yeah, I think this, it's an interesting question, and I think it's the right question implicitly to be asking, because, and it brings up a whole range of more granular issues, but a couple of the ones that I think are interesting to highlight at this stage are, so one is that I think it kind of highlights the fact that banks and other service providers have indeed historically been saddled, from their point of view, with a role as the policeman, so to speak, of the financial sector, which they've often not wanted to take on. And they've been given that responsibility, but not always with appropriate tools, whether it be a registry or an online service or other trusted sources of information, to be able to fulfill that obligation. And this is actually one of the most important hurdles we have in particular in emerging and developing markets to achieving more efficient financial inclusion. In fact, it's quite explicitly in many of the policy documents and policy debates we've had over the last 10, 15 years around the FATF that these kinds of both ex ante and ex post and ongoing monitoring exercises do in fact weigh most heavily on smaller countries, countries with less transparent ecosystems and legal registries, and on banks or other financial institutions in this case that are less well equipped to automate and streamline many of these statutory obligations. And I think so that I think highlights why this is actually a very important topic. In my mind, it kind of evokes the comparison with the audit industry, though, and that in the sense that if you shift the relationship over directly to clients, so that end users have a relationship with these compliance service providers, as you kind of outlined it, immediately that raises questions about the utility nature of them, the business model of them, and how much, how robust and at what scale, whether it be national or international, these kinds of new service providers may need to develop. And maybe we'll get further into that during the subsequent discussion.
And just to pick up on your points there, Ivan, so I'll come back to the business model in a moment, but the point you made earlier about the ability for financial institutions to be able to see the end-to-end picture and to be able to do the job of compliance with money laundering regulations. They are, of course, as financial institutions, customers do not want their personal data to be shared far and wide, and they are constrained in how they share personal data, and yet they have the responsibility for seeing the big picture of where the monies are flowing. So they are stuck in a very awkward position, constrained. They're coming up with inventive ways of meeting their obligations, but it's not easy for them. So if we were to think about what would be the role of a compliance service, I think we need to look into what technologies could they use. There are plenty of privacy enhancing technologies that could safeguard the data, but would make them more effective as a compliance service at being able to pick up indicators of money laundering and fraud and such like. The point you make about the business model is one that has been raised, because if it costs today £30 billion for UK financial institutions to meet their obligations, then how is that cost going to be met if we assume it's a future world? Those compliance services would have to do that. So how would they charge for that service? And I don't have an answer today. We've had lots of discussions about what would be the most effective financial model for it. We're starting from the viability from a technical perspective. How would it work? And then I think we need to then, when we understand that, come on to looking at how would we pay for it.
Yeah, I think it also, when I look at this concept, the other thing that comes to mind, of course, is that we are now entering into a world where, whether it be at the G7, where they agreed quite recently on a strategy to enhance the so-called data free flow, but with trust, addressing this issue that you've just raised around banks, among others, getting tangled up in a web of data privacy and protection laws while trying to actually comply with other laws about AML and CFT. We are having an increasing discussion around the role of decentralized identifiers and the role of data intermediaries in much more decentralized networks for capturing information. And then around the outside of that, to your point, having an ecosystem of service providers that are entitled or authorized to access in a trusted manner, maybe not the raw data per se, but to be able to analyze it in order to answer some of these questions. And so the business model issue actually raises at the very least two parts. One is that if we stay in an environment where it's governments ultimately that are the trusted source of identity of natural persons or legal persons, then they need to play a role in providing that digital public infrastructure. And that's not now what we're really talking about since the G20 announcement last year, in a way which is consistent with all these other innovations we're seeing, whether it be CBDC, faster payments, digital assets, etc. And I think that, so there's a business model in a way which gravitates towards that community and which probably needs to be thought through at an international level to some extent. And then an ecosystem of private sector providers, which I think is what is interesting in the way that you've articulated, that have some kind of habilitation, a kind of authorization to interact with those. And that looks like an interesting kind of area of development over the next few years that needs further thought.
I think the UK is quite interesting just on that point. So we don't have an identity card in the UK. We have a reaction against government creating central databases of identity, and that runs quite deep in the UK. So we have a model here whereby there are already private sector organizations that verify identity. Now, government has an important role to play. It's an important source of trust in identities, but not everybody has a passport. Clearly, we don't have an identity card. Not everybody has a driving license. So there are different ways of establishing identity, which again plays into this model of a market of compliance services. In many ways, and the other angle to that is that I don't think governments. Yeah, I know in Europe there is the EIDAS2 initiative, but as the world becomes ever more digital, the authentication of an identity in a transaction is going to be a critical step in a transaction. And the liabilities associated with that, if you get it wrong, are going to be significant, which is why it plays much more into a commercial proposition than one provided by a bank. By a government. I don't think governments are going to be in the position where they're going to stand behind the liabilities around identity. If an identity is compromised, if some other party is using it, it's going to be challenging for government to step in that context. That's more of a space where private sector organisations will provide services and technologies to ensure the identity of the person.
I would like to dig a little bit deeper into something that you two have already mentioned, which is like this is a centralized solution at the end. And this is very, very interesting in the sense that some of the projects that we have been running with at FNA have to do with how to organize what you, Ivan, mentioned, like a public national infrastructure, which is centralized, as I mentioned, that is able to see the whole picture. And that's something that, David, you mentioned before. If no one is able to see the whole picture, it's very difficult to work on AML and CFT, because someone has to get the entire network of payments to try to understand what is happening. Financial institutions can only see when they are receiving or when they're sending, but they cannot see all the network. And all the network, at the end, FNA stands for Financial Network Analytics. So what we think is that the entire network, will allow the authorities or this compliance service, new public national infrastructure, to check what is happening for AML and CFT. So perhaps one of the questions that I would like to enter into, and this is something that we have been discussing when working on national fraud portals for scams in Southeast Asia, in Malaysia, in fact, and some other solutions which are centralized, is how decentralization fits the regulatory frameworks that we have today. And also, and that's something that you were starting to mention, David, and that's why I chipped in. How does this model fit what the people want right now to share about their identity and their transactions, which at the end is their privacy? So how does this solution fit regulation and the behavior or wants of people?
So we don't have a centralized system today in the UK. And I wouldn't be proposing in this model that we have a centralized system for a digital pound. So it's not a centralized approach as such. What we have today is 30,000 plus organizations with responsibility on a risk-based approach to determine whether they believe there is criminal activity, criminal finance, money laundering. And they have to spend the time and effort to understand, what the risks are and the likelihood of there being, bad work at play. What this model is suggesting is, rather than 30,000 organisations, we have a separate set of organisations, the compliance services, that would have the same responsibility, but because there are fewer of them, and they would have greater expertise and skills, and they would be governed by in an appropriate way. So that, and what I mean by governed in an appropriate way is, if it is necessary to provide access to those organizations or to enable data sharing gateways between those organizations, then that can be discussed with clarity in the context of what they're doing, as opposed to what we have at the moment with the 30,000 organizations. A small number of them might come up with good ideas. Indeed, they are all the time, and the regulator has the job of working out which are the good ideas and which are the less good ideas, and which ones fit with regulations and data sharing laws, etc. So I think what we're doing is we're creating a specialist pool of organizations rather than a centralized system.
Yeah, I think that's right. The practicalities of the current digital world are such that centralized systems are really becoming a hurdle to further growth and development. And I think we have to kind of get to grips with the fact, so as David highlighted, there are many different ways that countries organize the management of identities. We're coming into a world where there are many different attributes that people can draw upon in order to try in a probabilistic way to identify somebody. And this is where a lot of the network analysis really comes to the fore as quite valuable, because just as we could, we could have extreme examples of a country which is extremely diligent at identifying natural persons, extremely diligent in the way that they register legal persons, and have one identification mechanism which is highly trusted on the one extreme. We could have other countries which have the same principles in place, but do it in a way where, whether it be an authority or a bank or somebody else, might not put quite as much trust in those data points. And so they want to be able to draw on supplementary data points. And so some countries could choose to have a national register. Some countries could have a national register with other data points. But having a network, a distributed network, needs then a certain degree of transparency and a certain degree of principles in place to be able to make those judgment calls based on a statistical analysis, to put it in a very oversimplified manner. And to do that then increasingly in an international sphere, because ultimately a lot of the activities that we're talking about take place not just in a domestic context, but across borders. And so we need to find ways to facilitate these sorts of models to operate across borders.
So it wouldn't be like a centralization, I mean, full centralization in network parlance of just one single compliance service, but many of them that would centralize. I mean, it will increase the centralization of the solution, but it won't be like a star network or a fully centralized network of compliance services. But they will have to talk among them very well to try to exchange the information necessary to have the complete picture of the network, right?
Well, there are organizations at the moment who assist financial institutions with meeting their obligations. So, there are already specialist entities out there, but they are, as you say, working for the financial institutions. We're proposing, well, what if, and I'm not saying any one of those organizations that exist today necessarily meets the entirety of the requirements for the regulations. So this again, this is an idea that we are working through the Digital Pound Foundation. How would this work? What would it have to? What would such an organization have to do? So we're testing this model and thinking about it in terms of its practicality and viability. But I think if you were to take a number of the organizations that currently exist providing their services into financial institutions today and make a single compliance service out of them, then, given that it's likely that a digital pound will start small with very simple low risk transactions, you can make an appropriate compliance service for a low risk transaction environment, and then as the uses of the digital pound grow, you can extend the role of the compliance service as appropriate as the regulations require.
Yeah, and I think there are interesting analogies in other parts of the financial ecosystem that some of us have discussed, in other forums recently. What we're really saying is that in the old world, again, as David pointed out clearly, the regulators didn't really have any other choices but to put the responsibility of trust on those financial institutions. And in a way analogous to what's happening in digital assets and stock markets, where the stock market and the underwriter were the bottleneck, but also the source of trust for, let's say, creating a new asset and putting it out there in the public market for trading. We're moving gradually to a much more, if I can use it slightly ambiguously, democratizing. We're breaking up some of those bottlenecks because we're finding in the new world of ledgers in particular and credentials that we can establish or even maintain or even enhance trust in ways that are different from having a hub and spoke centralized provider. And ultimately that's very good for the economy overall, because it means that we are reducing the market power of centralized bottlenecks, which have also tended to be concentrated in some of the major financial centers, somewhat at the cost, to the detriment of developing and emerging markets. And I think there's a very strong sentiment there also in many other markets outside of, let's say, North America and Europe, that what's also been happening through the FATF is perhaps not really balanced with some of the interests and needs of a much broader community out there of emerging markets. And so I think this is a really interesting and important opportunity to be seizing now.
Going back 5 minutes, is regulation ready? Is people ready? Are people ready?
This is regulations at the moment place the responsibility on the financial institution. And the Bank of England to date has said that the digital pound, there won't be any change under a digital pound in the way in which the responsibilities for money laundering are managed. So the Bank of England has published quite some detail as to how it sees a digital pound emerging. It's made a number of statements around how identity and privacy will be managed and such like. So we're just it's a thought experiment that we're running through the Digital Pound Foundation. We're saying, what if we did it this way? What would the benefits be? And I think it brings to the forefront of your mind and in clear sight exactly what happens behind the scenes, the difficult job that financial institutions have today, the ever-changing threat landscape that they have to face, and it makes one realize that a different approach is possible with the technologies that exist today. So that's it's a thought experiment, as I say.
Yeah, and I would argue, by extension, David, that in some respects, while the digital pound project with a retail focus could be a great kind of petri dish, a kind of great experimentation brand, that if we really want to make the most of this concept and find a home for it, it may actually eventually be in the role of wholesale markets working with cross-border transactions of a business nature, that the concept will actually bring the most value add, because it will also, potentially contribute to some of the, again, going back to what I said, the bottlenecks that are surround things like correspondent banking. At the World Bank, we've been constantly, dealing with issues in countries with so-called exotic currencies that find that they are being maybe not entirely cut off, but finding it ever more challenging in the current geopolitical environment to maintain a network for correspondent banking and international payments. And this concept, I think, also maybe should be considered in that context.
We're running a little bit late, and David mentioned a word that I want to use right now for the next question. You mentioned the word technology. What are the technologies that would be used in this kind of solution? Is there anything new here?
Well, there are a number of technologies that exist today, are mature today, that could be used. And there are emerging technologies that would enhance the model. So I think the world I work in digital identity within IDEMIA, and indeed at the European Union, there's much discussion about the concept of verifiable credentials. So the idea in this context, a verifiable credential could be held in what we call a digital wallet. The idea in this context is that I could go to a compliance service, I could comply with whatever requirements the regulator has in terms of vouching for my identity and proving that the business that I want to conduct is okay. And then, having received from the compliance service the assurance that all is good, then that can be held in my wallet, my digital wallet, as a verifiable credential, and then present it on to a payment interface provider, a financial institution, to say, I've been through the compliance service and here are the details, and I can offer that through my wallet. So that technology is relatively new. It's maturing, but it's there are international standards around it, as I say, if not necessarily mature. In terms of the sharing of information that would be required between the PIP and the compliance service, there are a number of techniques that are, again, are already used in the market today, that protect privacy. So one instance is where we find a passport number, let's say, as an example, that can be hashed or tokenized in some way, shared into a pool, and then other people can hash and tokenize passport numbers and then share them in a pool and identify whether the one that they've shared matches with the one that's been flagged as a bad example. And if it does, then you get a warning back to say, this passport number has come up. In that way, you're not actually sharing any personal data. All you're doing is you're getting an indicator back that you should do some further investigation of this particular customer. There are many technologies that allow the underlying data to not be used. Again, I think at this stage we've tried to keep away from the specific technologies and the specific technical architecture, and we're focusing much more on, as I say, what does the user make of it? Because if it doesn't work for real people, if people don't understand why they're going to a separate organization and what data would be shared and why, if we don't win over the public to this approach, then it won't go anywhere. So we have to start with the user. We have to look at what is appropriate data sharing, and then and we have to look at what the changes would be required to the regulatory regime to make it successful. And then if those things pass, then we can build some prototypes and start to see how it would work from a technological point of view.
Yeah, I think I would concur with that generally. I mean, I think there are ample technologies out there today to do this. There are potentially alternative or competing standards for data wallets, for protocols. But I think what's challenging the industry overall, again, to David's point, is that it will be in the adoption to a large extent that habits will be formed and that the specific user experience and controls, and with that, crucially, also the legal innovations, you might say, maybe not innovations, but changes in legal models, rights and responsibilities will need to be created in a way which is, again, perhaps analogous to the notion of a scheme, which is quite familiar to anybody working in payment systems. We may in future have data schemes, and these are things that really do need to be experimented with and encouraged in a way that by regulators or authorities to be a catalyst, because there is a coordination failure. And if we go back in the literature on standards adoption and innovation, we know from experience in the past that it's not always the quote unquote best technology that gets adopted and scaled out. There are different factors at play there. Some things will hopefully start to really get picked up and provide that foundation of users and data wallets in some structure, so that some of these ideas can actually be experimented with at scale.
We're 15 minutes before the end of the broadcast, so I think I will start wrapping up the conversation, and then we're going to go to the questions from the audience. My last question is something broader, and normally all broadcasts, I like to finish them with a very broad question regarding how do you see that things are going to evolve? In this case, what I would like to know, and for David, this should be a very difficult question, because at the end, the digital pound is becoming like a son for you, because if you're in the Digital Pound Foundation, as you mentioned at the beginning, you're supporting the digital pound. How do you vote anyway? Do you see the digital pound becoming like a leader or playing a shaping of the future of digital finance and central bank digital currencies over the next few years? Is the digital pound playing this kind of spearheading role in the CBDC space? What do you think?
So the Bank of England at the moment is in a design phase. So they've set out a broad timetable and talked about introducing a digital pound towards the end of this decade. And it strikes me that they're taking a very sensible approach to the creation of a digital pound. They've set out the reasons why they think it's necessary. And now there are many, many questions to be thought through. And indeed, this one that we've been discussing is not one of the ones that they currently have. And this is a big topic in itself. And they are encouraging discussion and contribution to this design phase. So this will last. They have got a timetable. I forget how long, but this will last many more months before they are ready to take a proposal, if indeed they think that that's the right thing to do, to Parliament, etc., to propose the creation of a digital pound. So I think that's where we are. I think we're building our understanding of what it is and the value of it. I think in different markets we've got leading markets. There are some countries out there who obviously have a central bank digital currency already, and there are others who are less interested in it. The European Union has begun a procurement process around it. But so I think the UK is in I would describe it as that sort of Goldilocks place. It's not rushing too quickly. It's intent to do it, so it's showing its intent, but it's recognizing that you need to move with people to build such a complicated thing as a digital form of money, and not rush the pace. So I think it's a great environment to do some thinking as we are on a really important topic.
Ivan.
Yeah, I mean, if I, again, in the spirit of crystal balling a little bit, I think that there are two things going on at the moment. One is that there's going to be a big difference at the end of the day in terms of impact between wholesale CBDCs and retail CBDCs. And the drivers of those two developments are very different, yeah, in terms of, and also the visibility of those types of initiatives are very different. I think that there are two places where CBDCs will most readily demonstrate their marginal improvement on existing arrangements. And they will be in areas of capital markets where a wholesale CBDC is important. And I think there's a lot more going on, or there is a lot more going on behind the scenes than one realizes perhaps in the broader community around that kind of asset and in the context of international interoperability. And that I think may actually go faster, probably will go faster than the development of retail CBDC. On the other hand, retail CBDC, where I think that'll have the most value, I mean, in many statements, central banks have actually said almost implicitly, our purpose is to make it so seamless that consumers don't actually notice the difference, which sounds, slightly counterintuitive. But from a stability and from a kind of market transition perspective, that's in many ways a very important consideration, is that smooth transition. But where it's going to have a real big impact potentially is cross-border for tourists that want to be able to use different currencies more seamlessly, more cost-effectively. And then we'll very, very quickly come back to David's question, but in a slightly more complicated environment, which is if I'm a tourist arriving tomorrow from India in the UK and I want to be able to benefit from the seamless payment experience and the lower cost of transfers, et cetera. How do I, as a foreigner, then suddenly get my digital wallet and get going? Those will be the places where it has real potential to add value, but they're the ones, those will be the areas where the prerequisite for getting there even may just have to be putting it in place for the mass market in a domestic environment. I think we'll have to watch that space.
Thank you, Ivan. Thank you, David, for this very vivid, interesting conversation. Now I'm going to start with the question from the audience. The first one is a really interesting one, which is this compliance service is going to be linked to retail CBDC, or is it going to be linked to all other retail payments that we know, for instance, with instant payment platforms?
The reason why a digital pound is interesting is because it's a new form of money, and you have to start with some use cases and start it in a simple manner, I would imagine, and therefore it's an opportunity to rethink how we do the money laundering. Let's say with a compliance service instead of the traditional manner. So we can start simple and expand the compliance service to meet the requirements of whatever the digital pound is being used for. So if the digital pound extends into new types of business area, then the compliance service would need to keep pace with it. So I mean the logic of the approach could be applied today, but it would be a massive change, a huge disruption to ongoing business. It's therefore not practical to do that. But if we're starting afresh with a digital pound, then it's an opportunity. Hence the title of the article that we wrote on the Digital Pound Foundation website.
Next question, that I see that Ivan, you agree, and we're not going to add anything. In case of a breach of AML or CFT, we know that banks normally are liable for this, and they have to pay fees, or they have to pay for arranging these problems. If compliance services are going to be on top of this AML CFT, if there's a breach, are they liable for this?
I think every organization should be responsible for acting competently. So a compliance service would need to be governed and would need to prove that it is acting appropriately for the risks that are perceived out there. So if it's incompetent, if it's not doing what it says it's doing, if it is negligent in some way, then yes, I imagine it would be liable. But equally, if it is acting in the way that the regulator requires it to act, if it is using techniques that have been approved, then bad actors will find ways to continue to conduct criminal finance. So you can't expect it to be able to eliminate all criminal activity. So I would say that's much the same as we are in the world today. Money laundering happens, but banks do their best to prevent it, and the regulators only find them when they find that there's been breaches in the process and they haven't been doing what they said they should be doing.
Yeah, I think this will be the most complicated piece of reapportioning liability, and I think it'll force people to take a much more granular view as to what responsibilities there are. Maybe there'll be more separation of responsibilities, as in, we often talk about compliance and due diligence as being a black box, not surprisingly. And I think this will force us to open up that black box. And when we do that, we will start to find that there is actually a long debate, probably a quite heated debate, about which pieces of liability are going to be taken by whom, and we'll be redistributing the deck of cards, you might say. I think that'll be an interesting area.
A collection of new black boxes, but smaller. Yeah, that's perhaps. Next question is, this for sure has some appeal for payment system providers, fast payments, for instance. Do you know if they're already supporting this kind of approach to this problem?
This is a new idea. It's a new model. We published it in January. As I say, we are the first hurdle that we have is to test it with people. But we're looking to onboard organizations that have capabilities that could be applied to this model and help us to do the design and test its viability. So we're looking to hence I was so pleased with the opportunity to come and speak today on this webinar. We want to encourage people to participate in the Digital Pound Foundation and help us see whether this model is viable and if so, how it should work at the detailed level. So yeah, no, if there are people listening who have an interest in that, then please do get in touch.
Sure. Perhaps the last one, and it's I would not say technical, but operational question, which is how important is for this kind of proposals the ability to verify or to confirm the payee to reduce fraud amongst financial institutions, which is now becoming mandatory everywhere. Is this a key part of this proposal as well?
So the way I view it is that we're working in the new digital pound environment. We will be working amongst trusted entities. So when I make a payment to another party, now the true identity of that other party, is only probably something I need to find out if something goes wrong. If I think I've been a victim of fraud. But if that other entity has been verified through a compliance service, then I now have a route back to that compliance service to find out the true identity. So the concept of pseudonymity is often raised in this context. It might be that I don't actually need to know the real identity of the party that I'm paying, but if something has gone wrong, then I need to be able to find a way through the law enforcement process to get back to the real entity. So as long as that real identity exists in the system somewhere, and I have a means to get to it, if fraud has happened, that's the important piece.
Good. I think that that's a wrap. Thank you very much, David and Ivan, for joining us today in the Payment System Broadcast number 15. This has been a very interesting and very lively discussion. So for upcoming events, take into account that the 10th of April, we're going to have the CBDC broadcast number 24. We're going to talk about Project Helvetica, the third part. The 17th of April, we're going to have the Payment System broadcast number 16 about regulation, capital, and compliance, focusing on RLN. So that's everything for today. Thank you once again, Ivan and David, for joining us today. Thank you for everyone for joining today in this broadcast. Thank you again. Have a nice day.
Thank you.